Greetings, market rebels. Welcome to this week's sector situation. It's Sunday, November 12th, 2023. I'm Wayne, and it is about a little bit after 20 after 2 in the afternoon here on the East Coast. Let's see what we've got in store for us with the trusty disclaimer for Market Rebellion and our trusty intellectual property rights notice. And I'm just going to flash as I typically do this week's macro measure stream. And let me just apologize because last week's stream somehow got flubbed up by me. I must have had some kind of cut and paste problem or reversal when I tried to move a line or two. Not sure what happened, but it got really messed up. So sorry about that. But this way you can take a snapshot of this. And if you want to see what we talked about or just a reminder, maybe of what some of the thoughts are with this week approaching. But without further delay, I'm going to stop the share briefly, and I'm going to move this out of my way, and then we're going to start looking at the sectors. So just bear with me for another moment, get on the right screen, and I think we should be in business now with it. Grid of 12 that we typically start with, excuse me. And unfortunately, I had RSI readings on here, and they're gone. So I've been really, the Thinkorswim Schwab situation has really clobbered me the past few weeks. It's made it hard really on a daily basis, but unfortunately, like I'm still piecing my way back through to where I was. Some things, what I understand, are stored on the server, some of your settings, and some things are stored locally. And I didn't, I wasn't aware of that. But anyway, the problem with that is that my layout, they were able to retrieve all of my custom indicators and other things that I've developed over the years, but they're not appearing where they should be in all the various layouts that I have saved. So I'm not sure why it was designed that way, but it's I guess it's my fault somehow. But so whatever the case may be, but it's just a little frustrating. But maybe that's not the most important thing. Probably what is the most important thing is what I covered in macro measure. So it's a little redundant here, but I think what you're looking at is in this market has really been a combination of many things, but we could say poorly positioned players, actors, and those folks have really had the screws put to them, and it might not be done, but it really hasn't been pervasive, right? It's been really concentrated mainly in XLK, XLC, and SMH. And you can see that those sectors are all near highs or broken out from resistance or about to break out from resistance. I don't have SMH up here, but a lot of other sectors, just giving it a quick glance, the positive side that I can say about them is maybe they're putting in a higher low in many cases, and maybe they will catch up to the squeeze performance that we've seen, but that really hasn't been the case this year. This has been at times, right? Things really came off the rails for most sectors after the July highs were put in. And a lot of those sectors have not recovered. And some key sectors, like, for example, transports, XTN, still are really way off, right? When that was sort of our canary in a coal mine the whole time, saying like this market should be trading lower, and ultimately the market did, and then we just got into oversold conditions, extreme fear, the right time of the year, the end of tax loss selling, poorly positioned players, and it all adds up to this maybe some OPEX stuff, some gamma exposure. The list goes on, and they were able to do what they were able to do the last 2 weeks. But that's the best thing I could say right now, is that although a lot of these sectors have really lagged and they're maybe not looking nearly as good, and even really important ones like XTN, which we talked about, and XLY, these sectors are way off their highs. And even if not just this high, but if I'll go back to the daily, but you'll see that consumer discretionary is way off of its highest high. So this is very peculiar if you ask me, when you're at 161-ish, and that to me is about 55 points away from the highest high that got put in way back there, okay, in 21. and you're at 126, which is your multi-year low that we can see here on this really tiny view. So you're actually right much closer. You're only 35 points away on that case, whereas over here, you're much closer to about 54 points away to the high. So you're a lot closer to your low than you are to your high. And I think in terms of the consumer discretionary, and to me, again, like trying to look for at the sectors for help as to forming our opinions or our sort of trying to come up with predictions and leans that we can work with. And remember, I talked about being proactively reactive or reactively proactive. Like that to me is the way to go in terms of trading, but I don't want to talk about that here. I talked about it a little bit in macro measure. Anyway, that's what I learned the hard way, you know, really nearly 3 decades ago is so I still believe that to this day, and I still operate that way, and I'm just trying to help where I can on especially folks that are new. But you know, I don't know how you can get really excited. I see a lot of people excited. I think there's a lot of effort being made to convince people that we're in a new bull market, and we might be. And I would love to be wrong about that. And I still feel like objectively the judge, I should say the jury is still out on that. So I'm not really willing to go there yet. And I hope I can, you know, in the not too distant future. That would be better, I think, for all of us if we have an economy that's expanding and people are retaining their jobs and their homes and they're not falling behind. But there's so many bad things that are cropping up in, I think, key areas like where's the consumer compared to where they were 2 years ago. Now, granted, that high was on the kind of like COVID madness, the response to COVID madness, I guess you'd call it hyper madness in some people's minds. But these transports just do not look good. A lot of other sectors do not look good. The best thing we can say about them, though, is some are not that far from maybe breaking resistance, like staples, but that's probably a little bit more of a defensive, right, than kind of a view typically. And other things like XLF got back on a better posture where it was looking downright scary. So a lot of other things are lagging, but they might have, as this arrow points out, there may be higher lows in place in some of them. And if there's a higher low, that's something they can work with. And maybe these will start to get pulled along by the bigger sectors in terms of performance, which are XLK, XLC, and SMH, which I'll bring up here. So that would all be dandy, but it's this in the Mag 7, as I discussed. Those three that I mentioned in the Mag 7 are where it's all being made possible. And it's great if this is a legit breakout. We have this sort of a cup and handle we discussed in SMH and other areas like the Qs and the spiders. Here's that view like on a weekly. I think it's pretty clear what that looks like. If I can get the scaling to cooperate, you can see where my corrective channel's been. It's not an ideal, right? This kind of makes it less than ideal. That would be a lot. If we took this high and inverted it and made it a low, it'd look really more like a textbook cup and handle. But I don't really get caught up in that stuff. I really kind of just say, look, you know, my eye is telling me it's close enough, so I'm calling it that. But anyway, that to me could be a real, you know, that could be a real strong indication. That's a very good pattern in my mind. And it's been popularized, but it still seems like it retains a lot of its charms. And so that could be a really good thing. We really could have this sort of trend change to bullish back here last year, correction of that bullishness. And now, right, are you about to embark on another bullish leg that breaks you out through and you go, because we're about to live in this golden age of AI. Given what I see in the economy, I really have, and given where valuations are, and given that a lot of this EPS magic has been done through share buybacks, I have a really hard time believing it, but it doesn't really matter, right? We're going to, as traders, we're going to trade it. If it starts breaking out that way, I'm no problem. Even if you're overbought trading it, just be smart in how you handle it, and always be ready for a possible false breakout or failure to fire and a very strong reversal like we saw and like I discussed in macro measure in SMH itself, right? So this is a key sector. You've got to keep your eye on it. It is short-term overbought right now. And I think that's the big problem for it because, excuse me for 1 second. We've got to get that to disappear. Right now, for example, I've got a 76 reading on the 2-hour chart. And so I don't consider the 2-hour chump change. And therefore, to me, like this is a little stretched at the moment. It doesn't mean it can't get more. It's just that ideally, if I'm riding something that's been going up the way this one has, as strongly as it has for the past 2 weeks, I'd rather enter right at something that's sub 70 rather than far beyond 70 already on the 2-hour. But look, it's got room to go on the daily. You're right at 70 practically, right? You 69.99, and so you're not super overdone, although you are clearly overbought in a technical sense. I mean, you're close enough. You got to round it to that anyway. So you're overbought technically. So, but the potential's there, right? We know why. It's got to do with the end of the year type of performance. And this is a big space where a lot of money is. And if they're going to make themselves look good, they need to make what they own and what they committed to at higher prices look good. And that means marking this and the Mag 7 and other names in those XLK, XLC, SMH spaces up and away as much as possible. So if that scenario plays out, you've got to look into those names, and especially ones that are, I think widely held. And if they are, keep an eye on those because they'll probably try to continue the markup madness. So going into the sectors, let me just show a couple of these. You'll see the XLE. You'll see that this was a nice performer. You can see that it's struggling, right? So it's sort of, I think, on the lower end of the channel, trying to hold here. We'll see, but I don't really have anything remarkable to say about that. XLK, what I've got to say about this is that this is, another just overbought situation. You're at 79 on your 2-hour RSI. This has been a very strong move, as is very obvious to everyone that's been watching the market. Is it unprecedented? No, there are times when these guys get their hands on things and they do go on wilding sprees, as a friend of mine calls it. And that is what we just saw. But this is really, I think, more about pain and other things than it is about real, what you would think of traditional buying and positioning, because people that are looking to buy blocks are not just chasing stocks tick after tick after tick after tick for days on end. That's not typically how large players, acquire most of their shares. But so I think it's something different here. But XLC is the other one. Like these are clearly the leaders that are really up there, along with SMH. Along with SMH, where you look at the technicals and you have to say, yeah, they're all short-term overbought, but they all have really good looking charts at the moment. It's really a question of once this squeeze maybe burns off, what happens, or does it, right? And is this enough of just sort of a pause above resistance where you hold and go? Is that enough for now? And it very well may be. I mean, that's the thing. It's a very tough call because this does have a relentless facet to it, where to me, there's people that are in panic scramble mode. And maybe that's because they're too short and they know what they're now facing in terms of what could happen, what typically does happen towards the final 6 weeks of almost every year, which should be illegal, and maybe it is, but I've never seen anyone get any guff for that. Maybe I've missed it, but I guess the FINRA's got other things to do, like surf an SEC, like surf the internet for pretty girls all day, like they did during the last crisis. But that's a whole nother topic. And I do kind of mean like pretty in a different way, if you know what I mean. But you can go check that news story out for yourself. Anyway, XLF, right? This is another key sector, still below resistance, but about to put the 100 below it, maybe very close. If it does, all SMAs will be below it. Still downtrending, but You could say, look, it gets broken out. If this is a really strong move, they consolidate for about a week, then they go. You really can't say like, hey, they didn't take a break. They did. So you got to be ready for this. Remember, these are not predictions. These are just like quick observations I'm trying to share to try to convey important points in my mind. Right, is this arrows here to remind me about, is this a high or low? So even real estate, which is related to XHB, home builders, do they have higher lows in place? There's a nice consolidation after the big run it had. It's right near resistance. Can they break it out and tack on another leg higher? Maybe approach these highs in the face of news that says that makes no sense at all. And my answer is yes, they absolutely can. So I'm not predicting it, but remember, they're starting to turn the charts better if they're able to break out and get above that 100-day there in white. Call it 79, close enough. Get above 79 and you hold there. Yeah, they could definitely take a run at this high. I mean, even though you're thinking, how's that even possible? I don't see the data that would support that. It doesn't really matter because this is the end of the year. It's about these guys getting their bonuses. So that was looking pretty bad for a while, but like magic, right? With that sort of step into the markets, whatever you want to call it, that sort of they interceded, whatever's going on there. We don't know really all the facts of what happened there. We do know that October was saved at the last minute by a nose, and they've been able to turn that into a windfall of short squeezing in mostly everywhere. Not to the extent, though, certainly in certain sectors, but XLRE, maybe XHB on the verge of maybe tacking on more. Remember, anything that they can't do, they would turn into a failure. So being able to not really being able to reclaim the 100, hold the 100, failing below the 100, or maybe even below this resistance line that we have here, that's a problem, right? So you want to see that. So a lot of these things that we're looking at now could join the party. If they're able to keep this party going, a lot of these things are showing really that the economy, I don't think that a lot, like most of the economy doesn't really look that great if you want to look at how the sectors themselves are performing. But those big dogs mask it all, and that's what they own. And so this is how the game. This is how they play the game, right? It keeps, if they can just keep those things going, that's all they really need. That keeps the damage from worsening, keeps the mirage that everything's wonderful going. People look at the indices, index levels, and the weightings. To hell with the weightings of these things. We already looked at in macro measure how equal weighted and how some of these small caps are just not. They're really in trouble, right? This stuff is not working, but it doesn't look like you would expect it to in a bull market, in my mind, or the start of a dawn of a bull market, or the resumption of a bull market. But maybe they'll finish the year strongly. They'll get a lot of these things will get pulled along with some of the big dog sectors that are working. Maybe ultimately they start closing the gap, and that's what I'm trying to highlight here this week, is that they do have the potential for higher lows and then maybe highs in XLP and many other sectors. Let's look at XLY now. This one's the big canary in the coal mine to me at this point, along with I always like to look at this one. I like to look at transports. I like to look at financials, energy. Energy is its own thing. Don't even want to get into that in a big way right now. But look, another possible higher low. So it's really lagging. It's really off the highest highs it made a few years ago. But somehow they're pulling it all back, right? They're pulling it all back up, and it's really close to possibly breaking out. But if they can't push through and hold here again, you got to say that if you get overdone, overstretched, and these things don't participate, you might see a little gravity come back into some of those leadership sectors and see a little bit more corrective activity before they can go again. But not really a great look, although it does have the higher low put in for now. So you can't dismiss that. Same thing really in transports. So this is why I'm one of the reasons I'm kind of more indecisive, I would say, this week about what's going to happen next, because I don't know, right, if they're going to be able to break through resistance and challenge the recent high that was made early this past week, or is this thing just going to start losing even this temporary higher low right here and even come back and challenge these? So we don't know, because we don't know what the news over the weekend will be. We don't know what yields will be doing. We don't know what the dollar will be doing. We don't know what Wall Street will have to say about this, that, or the other thing in terms of upgrades, downgrades. Who knows, right? But again, you're at that point where it's an important level where do you have the higher low? Again, here's XLB as well. I think XLI looks a little bit, in ways it looks a little bit better than XLB, which is interesting because they're similar but different. But the industrials held out for a while and were looking really good, but then they got themselves in some pretty serious trouble ultimately. Now, you could see here that this had that sort of nice pullback to here. Does it have the higher low? It seems like it does relative to here for sure at this point, because you were able to make a new high. So this just has to really get through the purple 200, and then you've got the 150 near 103.35 right now, but then there's room to this 100 up here. But then the resistance line's really there as well. So that's what I'm thinking really, is that before this is over, if they can get above this 200 and hold, they're probably going to try to work it up towards there if this rally continues. And I guess the 100 at 105-ish is the big level to keep an eye on. I'll just do XLU for to complete it, because we normally do. It's on the lower end of the channel. You see I have drawn maybe another higher low put in there. So keep that in mind. That's usually defensive, right? It usually moves inverse of the of interest rate sensitive area. Let's see here. Oh yeah, so I wanted to kind of hop back to XHB, and then we'll show the wooden cut quickly thereafter. You know what this one looks like. We already reviewed it, but then you can see that the ETFs we've been using instead of the lumber future, those have also kind of gotten back on their horse after getting knocked down. So it's dubious the way a lot of this happened. I'll grant everyone that, but we can only work with the fact that it has happened. And in times gone by, things that have started out with a very hollow ring, something that looked and probably was incredibly bogus to begin with, somehow blossoms into something stronger later. And maybe it's just good fortune. I don't know. But you can see that really the whole real estate situation is, especially housing, has definitely gotten away from the danger zone. It's on the cusp of doing more. It would make no sense. But remember, the wall of worry is what helps these guys, especially when they've got the seasonality, this presidential cycle, all that kind of stuff working for them. So let's see if we can get a look at copper and see if that's also done a little bit better. And not really, right? So globally, you would say, again, more proof of there's pros and cons right now. There's some possibly good things, but a lot of this stuff like this is really not confirming anything. Energy doesn't seem to be confirming anything. The news, important sort of reliable indicators and things, historical precedents, are not showing anything wonderful happening globally. Europe doesn't seem to be having wonderful things happen. Asia doesn't seem to be having wonderful things happen. Copper's telling you that they're not happening. Energy's, and there's this deglobalization. So it's not as easy to read things as when things were more in sync and you don't know who's not trading with whom, and things like that, right? So it's become really a tough game, tougher game than it was even. It's probably never really easy. So there's kind of a look at some of that stuff. Let's look at things like, we'll take a look at gold and silver and XAU. I'm not going to go through all of them, but I did cover this a little bit on Cocktail. And yeah, there's some decent signs, in some ways. But what we've also seen has just been some of these things just refuse to get better on a bigger picture basis. And you can see silver looks a little worse than gold, I think. But you could maybe be working on some kind of an inverse compound head and shoulders, whatever you want to call it. But we need to see something here. I just don't like to get, other than like hedging, which is what I'm trying to do with gold, silver, platinum, all this kind of stuff. I'm just trying to hedge with it, but I want to hedge more than I am hedged. And I want it to be a certain percentage of my overall portfolio that's, a smaller 5% type of holding, because I feel like the risks are elevated in some ways for various things. But I don't think these are great bullish traders yet. I think we need to see more out of both of them, and we just haven't seen it. There hasn't been. We've seen a couple little flurries of UOA that have been, maybe, I hate to discount it, because the reason why I hate to not put ideas in on that is because you have no idea what kind of global geopolitical stuff is going to be happening. And so I don't like to not have anything in, but until I really see better charts and really something stronger than a flurry of UOA, I've really been reluctant to get aggressive with all the paper that's come in on the bull side. And to this point, I think it's been a pretty solid decision, because we just can't get out of our way. And you can even see XAU, like, that just doesn't really look all that great, right? I don't see anything there that looks all that great. And I meant to get to the oil future to see what that looked like relative to XLE for us. There it is. And that, again, is sort of sitting it out. Remember, I say it every time, but it's got its own situation, right? It's kind of like its own independent sort of ecosystem. You got to know what's going on in this market, very important market, but it's certainly not really en fuego. And again, that copper, I think that the EOS housing stocks and wood and cut going up with them, to me, is the odd thing out that has a lot more to do with putting the screws to shorts than it does really being based on real underlying economic activity. That's just my take on it. Doesn't mean you fight it. I'm just saying, if trade it, however. It's just that I feel like if anything's going to suffer and come back down again, it'll be that, in my mind. It's just a real odd man out type of situation. I'm trying to think if there's anything else I can go through that maybe would help out a little bit. I just think the main message right now is that, again, your big leadership areas are your SMH, your XLC, your XLK, and your Mag 7, like we talked about. But remember, they could start they could pull more of these along for the ride when they've got higher lows temporarily in place, at least, to potentially work with. So if they come out of the gates, they were able to hold and go, you could see more things begin to pop, and you'd see more of a fan out. And that would certainly help, I think, convince more people that you really are seeing more bull market resumption-esque activity across the sectors. But you can see, to this point, it's still pretty narrow. You can pick names out of anywhere that you want, but and say, well, no, it really isn't. But there's going to be an occasional name. But just these measures, things like the RSP, which we talked about this. This is bounced, sure, but look how this looks downtrend wise versus what we saw in the SPY, which looks much better, right? This is equal weight rather than market cap. Here's the other one, right? We can look at IWM. The small caps, really, to this point, they do have a higher low maybe in place, but look how they performed. Look at that chart, right? It's just a downtrend for the last 4 months, or 3.5 to 4 months. So that just doesn't look good. And then the IWO, which is your growth in there, looks very similar. So again, a lot of these things, like, if this is so wonderful, things are so great across the board, and you're really on the verge of this new bull market, and the economy is really, as some people are trying to couch it, is really doing well, then why are more things not doing well? So that means that things either will start participating and kind of get pulled along for the ride, or, right, the Mag 7 and the rest of those sectors we talked about, those three, they've got to continue to do very heavy lifting, but that's all they really need in the end because of the weightings. right? So that can really, by using those, concentrating in those, they can just keep this market looking buoyant and healthy on the surface. Meanwhile, underneath the surface of these big names and big spaces, there's a lot of deterioration. So it might be real bifurcation. It could be the real haves versus the have-nots, with the haves just continuing to feast, do well, buying back their shares, making their EPS per share spike. But also, I don't think that, given the trends of everything, I don't think it's unreasonable to think that tech and IT is a bad place to be. It certainly isn't. It's a great place. It's just a question of, are we really seeing growth in reality that's sustainable, or are you seeing certain things that one-off things that they often tack in, and then you get this sort of negatively harmonic situation across the globe, where you go into maybe like a 2002 through 2003, or 2001 through 2003 phase, where things are just kind of as a hangover effect right after this big run that you've had. I don't know. It's hard to say, but that's just some of the thoughts I would share. And I would also share that they could kind of produce or fabricate a great finish to this year, and that is in accordance with the third year of the presidential cycle. But we've seen years where it was wholesale manufactured really give it up very quickly in the new year. And I think 19 and 21, the aftermath of those years, you'll see where when you got into the new year, there was a lot of give back. It might not have been instantaneous in both years, but it showed up in a big way, and the market really, was sent packing, was reeling at one point. So I'm going to wrap on that note, just because there's a lot of conflict out there. There's not a lot of confirmation yet. We might be seeing a big week with these higher lows potentially. If they break those out, it's going to really put more pressure on the people that are short and the people that are fighting this. And that's probably just what the bulls would order. If they sort of tread water in the big dog names we've talked about, they don't really do much. They chill and they lift up everything else. That works too. It's just a lot harder to lift up everything else, but are higher lows in place in a lot of places. So I think the big tell will be, do those hold? And if they do, you probably know what's next based on what we're talking about here. If they don't hold, right, does that eventually spill over to the mirage in the big dogs, then starts to come under pressure itself, because the rest of the market's getting thrashed. So I do hope that something we've discussed helps you out this upcoming week or some week in the future. I want to thank everyone for tuning in, and I want to wish everyone a great finish to their week and a great week ahead. And we will be in touch, as always, throughout the week in various ways. So everyone take care. Thank you.